Doesn't time fly? Where did the summer go?
What summer?
The Absolutely. Well, that certainly is the next one. Wasn't August? August, which I expected to do quite a lot of sailing. It was either no wind at all or far too much wind. So a bit of a bore in terms of enjoying ourselves out on the water. But there we are. That's life. And such are the markets. You know, we have good runs in the market. And we have runs where we think from time to time, why do we bother? And it's the sort of the trader's lament. And of course, the important thing is to keep going, and take the rough with the smooth, and try to smooth out the rough bits, because traders sometimes can get themselves locked into I don't know, a bit of a losing spiral, and breaking out of that spiral can be a bit problematic at times, because we so often hear those sort of ghastly stories of traders who completely blow up. You know, they do pretty well for a couple of months, and then it just all completely goes to pot, and they're left scratching their heads and thinking, perhaps I better go and get a proper job, and maybe just give up on trading completely. So I'm going to talk just a little about what helps me keep on an even keel in the markets, and then of course we'll look at some of the recent calls that some of our members have been taking.
That's the thing to do. Great. I can see the 20-minute extreme swing trader. That gives a little clue as to the style of trading that you like to apply, George. So great. I'll hand over to you. We're just gone 6 o'clock, so we've got about 45 minutes, and we've got a great, attentive, and responsive crowd in the event today. So I'm sure there'll be questions as we go. But I'll hand over to you, George Hallmey from Traders Class.
That's excellent. Many thanks indeed, Simon. Many thanks indeed for that excellent introduction. We've known each other for a good many years, and I've been around the trading world, well, pretty well all of my sort of adult life, and we go through phases of getting really quite excited about what the markets can actually give us. Might get a little bit of early success, as indeed I did with gold donkeys years ago, and then we think, it's easy money, and we go through a period of time, or at least let me just describe my my process. I went through a period of time when, having gone through the euphoria of making a lot of money and thinking, oh, geez, this is easy. We can do anything in the markets here. I then went through a fallow period where I gave back virtually everything that I'd made in the initial stages. It's only then that we realized that it's not our cleverness that actually made us sort of loads of money in the first place. It was probably a fair old bit of, to be quite honest, beginner's luck. And we've just got to accept that fact, that there is a fair old bit of luck that just might give us some real good profits early on in the markets. But then we find that, something gets in the way of making money. And I speak to traders who find themselves dropping into a losing spiral where, I get the odd call from people who say, look, I've been trading successfully and it's been going really well for about 18 months, maybe a couple of years or so. But do you know what? I just cannot do a profitable trade. In fact, getting to the point where I'm thinking of giving up trading. That's a story that I hear far too often. And one of the big problems, of course, is that people can find that they're making money doing a particular thing or trading with a particular amount of money, and then something changes, something clicks in the brain that says, oh yeah, you're on easy street, you can do so well. And what happens? Well, they do something differently, and it's different for different people, but the most common one is they increase position size, and they increase their position size above whatever it is that their comfort level allows. And that's the biggest killer of the lot. So somebody might be trading, I don't know, let's call it pound a point, and they trade a pound a point, and they get to the point where they are profitable. And then, of course, the brain starts to extrapolate that if instead of a pound a point, they were trading £10 a point, or perhaps £100 a point, they relate that immediately to the profits they made on £1 a point and think, wow, I am going to be making millions in no time at all. So what do? They increase to the £10 a point or the £100 a point, and away they go. And what happens? More often than not, they drop into a losing cycle, and because they're trading more heavily, the chances are that their initial risk parameters have gone completely out of the window, where maybe they were reasonably sensibly risking no more than about 1.5 or 2% of their trading capital on each trade. All of a sudden they find themselves losing 5, 6, 7, 8%. And of course, you don't need many bad trades or trades that go beyond break even and end up taking losses. You don't need too many of those at 6, 7, 8, 9% loss to actually completely wipe out. And that, regrettably, it's the story of the majority of people who go into trading, and particularly those who go down the spread betting route. So that's just to put a note of reality on things. So
there's a lot of heads nodding here to what you say. Guy says made a year's income in 1 month and lost it in 2 weeks. So I think we can all agreeing with what you're saying.
Yeah. We've all been there. We've all been there, and for good majority of people just quit completely and say, well, this is not the life for me. Others start to see light at the end of the tunnel, and light at the end of the tunnel comes from getting rid of a thing with a three-letter word. And I go just digress slightly onto just a touch of psychology, and that is ego. The big problem we all have is our ego, and the ego makes us do all sorts of things. If there are any of us out there who perhaps might, after a few drinks in a pub, get a little bit upset because somebody has criticized us, made a comment, bumped into us, and we've spilled our beer, our immediate reaction, or for some of us, might be, Mitt, what are you up to, mate? That's our ego. That's our ego. We have been slightly damaged by that by that encounter, and we don't like it, and we fight back. Now, in the markets, if we take a loss, which is rather like somebody spilling their beer over us, if we take a loss, then we've got to be really, really careful and not act like the guy who's had far too much to drink and might even get to the point of fisticuffs. Because if we go into the market with fisticuffs, what we're going to do is that where we might have been trading, let's say, £5 a point, and we've been doing so reasonably well for a while, and if for whatever reason the market gives us a bloody nose with a trade or a whole series of trades, and we think, oh right, well I just need to trade bigger, don't I? Get out of this hole that I've dug, and then you increase the size, and you find that the market is going to turn around and going to thwack you really, really hard on the nose. On the metaphorical nose. It bankrupts people. It can bankrupt people if their ego gets in the way and they are unable to sort of learn from that. Now, the sizing of trades, it's incredible actually, because we're all different human beings, but we're all driven by the same, greed and fear. We're all driven by greed. And why are we trading? Because, well, we're actually a tad greedy. We got to admit this, that we're in it for the money. We're in it for the money. There are those who say, oh yeah, no, I go to a higher plane. I'm in it for the intellectual challenge. No, you're in it for the money. If there wasn't any potential money in it, you would not be in the game. And that is immediately a problem, because everything that we do in sort of normal life, where we might be sort of in sales, or we might have a business where we want to get more customers, well, you've got to work harder, you've got to do more hours, you've got to speak to more people, and trying to sort of use that exact same process in trading. And particularly if you've been climbing the greasy pole, somebody might be in sales, become a real good aggressive salesperson, a really good salesperson, and they then get promoted to becoming the manager, etc. And then they think, oh yeah, I think I might become the general manager, I might become a director. They start to climb the greasy pole. And everything that works in a normal business to climb the greasy pole, it works in exactly the opposite way in the world of trading. So, where you're perhaps moving up into middle management, higher management, or whatever, what are you doing? Well, you're schmoozing, you're speaking to the right people, you're doing the right things, you're working the very, very long hours, and possibly longer and longer and longer hours. All of that is totally counterproductive in trading. And over a period of time, those who stick around in the business start to realize that, and they start to realize that everything that works in normal life doesn't actually work in the world of trading, because it's just me and the market. And what I've got to accept is that I am a tiny little cog in the market's wheel, a tiny minute little chip of a cog, and there's no place for me thinking that, yeah, I'm great at this, I've cracked it in sales, I've cracked it in management, I've cracked this, I've cracked that, I'm going to crack the markets. Going in with that attitude, where the ego is everything, well, they're the people who will just end up wiped out in no time at all. I have seen it so many times. So there we go. What I'm suggesting is that somehow or another, in order to at least survive in this business, we've got to go through a process of humbling ourselves in front of the markets, So if we get it right, and we make good money, and we make a lot of money, we got to be very, very careful, because do you remember that old expression that perhaps our mothers used to tell us? Pride comes before a fall. And nowhere is it more true than in the markets. So there we are. That's the beginning sort of sermon here, and I'm going to just show you this little run through. There are sort of several stages, and the stages that we go through are these. Steps to becoming a trader. This is on Forex Factory. You can just look it up. 5 steps to becoming a trader. The first one is unconscious incompetence, and that's where I was with my gold trading when I first started out. And you think, wow, this is so easy. But then you very quickly find out, and there it is, it's saying you haven't got the first clue about what you're trying today. You take lots of trades and lots and lots and lots of risks. And of course, trades turn against us. And so we reverse, and it turns again, and we reverse again, and we reverse. Oh dear, 3, 4, 5 times. I've got to follow this market. It's got to go one way or the other. It's got to keep going for me. And by the time you look around, you've done sort of half a dozen trades, in, out, trying to trade it one way, then the other, and you've lost a whole load of money. And so you get through this area of unconscious incompetence, and you start to work at it. You start to read some stuff. You start to get stuck into some of the classics, Jack Schwager's books, Market Wizards. You start to realize there's a bit more to it than just looking at the charts, and it's all within our brains. We realize that there's a fair bit of work to be done here to work on ourselves. There are so many websites out there, too many. There are automated systems, saying particularly on MetaTrader. Well, you know them, they're all out there. $79, and you've got the EA, you've got the system. You just put it on your machine and you walk away. Well, does it make all the money that they say they're going to make? No, it loses a whole load of money. So you then look around for a guru, and the guru might well help you along a bit. Again, get carried away again. And the reality is the majority of traders just die out in the first 3 months, and they give up. But some of them do stick around, and after a period of time of just staying cool in the markets, just waiting for waiting for the markets to do what they're going to do, rather than us trying to will the market to go in the direction that we want it to, eventually it starts to fall into place. You get the eureka moment when you realize that, my goodness me, yeah, it can just about to start to work for me. And it's in this stage, and not the initial stage, that people learn money management. And money management, let me tell you, is everything. It is everything. It is everything. The idea is to, when we're wrong, we want to lose an absolute bare minimum, and when we're right, we want to make our money. The problem is that most people, until they really do understand money management, get it exactly the opposite way around. So there you go. That's that. We then move into step 4, conscious competence. We sort of start to realize what we're doing. We're probably still probably not very profitable, or barely breaking even, but with any luck we come through it to the point where we are unconsciously competent. So I would recommend to grab hold of this little 5 steps, and hopefully you'll find that really quite interesting. Before we go on to the markets, mention one other area that I find absolutely all important. Zen is an offshoot of Buddhism, and Zen is the process of allowing the world out there to do what it's darn well going to do, and just allow it to wash through us, and not allowing us to get all wrapped up in it. We've heard all of this, all of these news reports. Case in point, what about Donald Trump? How do you feel about Donald Trump? There is so much there which is negative, not very much of it positive, and of course it impacts upon us. And if we just take it all on board, we end up getting all wound up, totally wound, and our reactions to Trump and what he's doing, what he's not doing, etc., can end up turning us into turmoil, so that we end up walking down the street muttering to ourselves, oh, that could be Trump, what's going on there? Zen allows us to rise above that sort of stuff, and it also, if we just study it a wee bit, we'll start to gain from it, and we'll let the markets do what they're gonna darn well do, and we will start to get better at following the markets and not willing the markets to do what we want it to do. Anyway, I recommend this little introduction. You can get it free on the internet. You can actually pay for it as well. You can get it as a PDF. Look it up, Zen in the Markets, and it's by this very interesting guy, Edward Allen Topple. I recommend it to you. What you can do, just drop me an email, george@clickevents.co.uk, and I'll send you the link to it. Simon, I don't know if you might just be able to pop that into the chat box. Right, so let's go and look at some markets. I just want to show you a method that I trade these days. I do very little intraday trading now. Used to do it all the time. In fact, spent sort of quite a few years getting up early in the morning, staying late at night, and being sort of harnessed to the desktop all day long. And well, you can do it for so long. You can do it for so long. But then I sort of came around to the process of wanting to spend more time doing other things, particularly sailing, and consequently just didn't have the time to stick around in the markets all day long. And consequently, I moved to a method of trading, which is swing trading, and you can see it here. This is a typical sort of process. I've got a very simple line here. It's based on Bollinger Bands, and I've also got this activity index down below, which is a little composite indicator. It compares, it's got momentum in it. It's just like a standard momentum indicator with the amount of volume that there is actually going through on these moves. And it's very, very good at picking out what the trend is doing. So I'm just going to put a vertical line. Look at that. Previously over here on the left, we've got this downtrend, and then we've got a very, very clear uptrend. So the two vertical lines, if I can get that more or less in the right place, there we are, have picked out the best part of this up move. It just happens to be gold. Gold, it's the best currency there is out there. Everyone should hold gold. Some gold, some gold. A lot of people will trade it and be in and out of it, and they'll buy it when it's cheap, then they'll probably sell a bit when it becomes expensive. So we've had this really good run up, picked out very neatly by a couple of indicators here, and then we can fine tune it by this swing trend line, and this can just sometimes it doesn't work so well in that it can get us out of a good market, but we just follow the trend. What's a trend? Well, it means that all of these lows are higher than the one prior to it, and as long as that keeps happening, then we want to be in the market. We want to be bought. Then we find that, say, that last higher low, we get price moving below it. Trend changes, and right now we're in a downtrend. We sold it there where that arrow is. That was our first sell. Second sell came down here. You can just see the lines that are picked out, and we're just running it at the moment. I mean, we're up 330 on part, and it's actually just over 180 where we've just added into it because it seems to be the sensible thing to follow the trend. And the two indicators there are pointing quite nicely. We've got our swing trend is red. We've got it move through our all-important midline there, and our activity index, this combination of momentum and volume, is now below the zero line. So it's saying, yeah, we've had the best of this move up. Now time to sell it. So that's taking a little glance at gold, which is an absolutely tremendous market to trade. Now, we also trade the indices, and DAX, well, you can see the arrow. We actually got a second buy signal here, and so what's happening with DAX? Well, it's going up. It's going up. We had a beautiful divergence. Now, I guess that most people in the room probably know what divergence is. Quite simply, where price has been going lower, 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 we've got these lower, lower lows, we find that our indicator here is not going to a new low, and that's called divergence. So they're working against each other. We then get price action, nice hammer candle, price then moves up through our midline here, and it gives us a buy signal. So we buy it as it's moving up. In fact, this buy signal was just, well, the actual signal came a little earlier. Came 3 of these candles earlier. But there we are, we just run it until such time as this succession of higher lows gives way to coming back the other way. So there we go. Try to keep it as simple as possible. Also try to do so in as relaxed a way as we can possibly be, which means not trading beyond our comfort zone. Now, the comfort zone is going to vary enormously from person to person. Some people will find that pound a point is as much as they feel comfortable with. Others, 100 pounds a point, no problem at all. You will know what your comfort zone is when you trade. If you're losing sleep at night when you've got trades on, you're above your comfort zone. Reduce position size, and you can sleep. Now, what about this particular market? This is the pound against the Japanese yen. It moves like crazy. It's probably the biggest currency mover that there is out there, and consequently, you know, if somebody has been trading, say at I don't know, call it £10 a pip, then you might want to reduce your position size, because in a typical day it'll do more than 200 pips, whereas other markets might be doing less than 100 pips. So consequently, we're not going to bet quite so large to make sure that we don't exceed any risk parameters on our trading. Now, couple of vertical lines, and you can see just here, this picked out really quite neatly the change in trend. So we've got an uptrend there on the left, and then it breaks into a downtrend. Yeah, you know, there are bounces along the way, and the indicator, activity index there, has just picked that out really quite neatly.
George.
It then, yeah, Simon.
Just sorry to interrupt. Just to confirm the email address, you've got that link to the free book about the Zen. George at clickevents.com.
.co.uk, please.
Right. Thank you very much.
Fine. Okay, that's great. So we then found that it bottomed, and it put in this classic 1, 2, 3 multi-point reversal, where we've got a higher low, we've got the right looking candles, and away it went. It is still going. Up to last night, it was up 930. So well, you know, do we know how far it's going to go? We can sort of get a rough idea by looking further out, and this sort of tells us that maybe, just maybe, it might want to pause soon, but we just let the market tell us. Just going to let the market tell us and let it run. So that's one of the biggest movers that there are. Pound against the Swiss. Close this one prematurely, should still be in it. Money management, well, quite simply, we have too many trades running on the pound. Now, you've got the pound against the Swiss, pound against the CAD, pound against the euro, etc. We were sort of heavily into pound trades, and something had to go, and so, well, this one seemed to be at a point where it was highly likely to pause. It made sense to cut back on the number of trades that we had. So, well, when we've got a runaway trend, we want to be on it. It's not always like this one. We had a very neat little, what we thought was a very neat little turnaround here, a bottom. You know, we've got a big hammer candle. We had pricing starting to move up. It was moving up above our indicators. Everything was looking hunky-dory, and thought it was about time to get in. So we got in, and what happened? Yeah, it went up, but it then came back down. So what we actually ended up with is our money management means that we always want to take partial profits along the way and get our overall stops to break even if we can. And what actually happened here was that it came back. We took 18 pips out of it on half of the position. The other half just closed at break even. And you know, we then got back in, and lo and behold, what do we find? This was yesterday, by the way. Got back in yesterday, and it came right the way back against us with a day's trading, a candle, which is not what we want to see. It's a bearish engulfing, and so consequently, we're now out of this one, just waiting to see what is going to happen next before going back in on the AUD CHF, the Australian against the Swiss. Now, there are plenty of others that are chasing away. We've got the pound against the AUD. We've got the euro against the AUD, which you know, can't come right all the time. This one actually gave us well, we've got a succession of whipsawing signals, and consequently, we're out of it. We're out of it at the moment, just not going to chase it. First of all, it gave us a signal to go long. It then gave us a signal to go short, and it's now gone long again. So when we've got a whipsawing market, what's the best thing to do? Absolutely nothing. Absolutely nothing. Just to stand to one side and let it run to really wherever it wants to run without us, and we can just allow it to get on with it until we get some clarity coming in. And of course, if we describe ourselves as full-time traders, the danger is that we feel that we've got to be trading full-time. Now, it's obviously self-evident, but trading full-time can very often work against us, because there are days and there are times when the market is just doing nothing, when it's going sideways and we're not clear about it. And if we're not clear about it, it's probably a good idea not to go until we are clear about it. Now, this particular one, the CAD against this, gave us an absolute amazing trend on the way up. What's it doing now? We're not quite sure. So consequently, we're not in the market and not interested in trying to be right. Back in the early days of my trading, I was always trying to be right, and I would get upset if I saw a whole series of what I thought were signals telling me price was going to go in one direction, and then it darn well didn't. So if you find yourself getting upset with the market, quit. Just quit trading. It might just be for half an hour, it might be for a week, but just quit until you can accept what the market is doing and not getting upset for maybe getting it wrong in the markets. Now, a couple of other things have been running really nicely. New Zealand dollar against the Japanese yen. This is an absolutely fantastic mover. It's typically the carry trade, because when you buy this New Zealand dollar, which has got quite a reasonable interest rate, against the Japanese yen, which has got, you know, virtually a zero interest rate, then you actually receive not only the capital appreciation to move up, but you're gaining an interest rate advantage every few days. Now, this market decided to come on down, then it decided to move on back up. It gave us a signal, but we got a bum signal along the way. So what actually happened here, in fact, you can probably see it says plus 54 on half the position. Well, what actually happened was that it came back and took out our other half. We were cautious. We took half profits on the way up, and you can just see this little red sloping line. It took us to there, and then out of it came. So half of the position closed at break even, half of the position gave us 54 pips. We then got back in, and it is still currently running 135 pips on so far, and all of the indicators are pointing in the right direction. We do also have a little bit of Fibonacci we built in. Gartley level, well, you know, sometimes that can lead to reversals. So we've got various little tools that we use, and in general they work quite well. Now this pattern, I'm not going to tell you the name of this pattern. This is the Australian guest, New Zealand, currently short on this one, having sold it short. Had a little false start, so we took a very modest loss on this little pattern, but now we're more than recovering that modest loss. In the blue box is a beautiful little pattern. It's a beautiful little pattern. Now I'm not going to tell you, I'm not going to give the game away on this one because, well, you know, there are one or two secrets that need to be not aired too publicly. But if you can spot that, let me know. Probably not right now, but just drop me an email, george@clickevents.co.uk, and tell me what that pattern is, if you know it. And if you don't know it, ask me the question, and I'll tell you with a link to exactly how to be aware of it. So this one has been running up, and the trend changed to down, and the activity index over here has told us, it told us quite clearly where this was starting and more or less where it was coming to an end, and consequently it then told us that we should be selling it. So there's no rocket science here. It's all fairly straightforward. We don't get it right every time. If anyone ever tells you that they do, they are just lying through their teeth to you. So be very, very, very cautious about what you hear. Yeah, against the British pound. Now you may remember that just over a year ago there was something or other called Brexit, and of course what was happening? Well, we had this up move. We had this up move, and it up moved whilst the British pound was just collapsing. So we had this move, and it got to a point where earlier in the summer things started to change somewhat, and then the trend has changed. And as the trend changed, it gave us the signals, and the signals said, the uptrend has come to an end. It is now time to sell it. And sell it we did. And to this level, where we've got our stops, our stop profit, we're up just under 300 pips. So I say I produce a video a couple of times a week, and this goes out to my traders class members, anyone who's actually bought one of the products, and I just sort of show them the things that I'm looking at, and you know, some of the members actually then email me in and tell me that they're actually looking at and trading. So we're just running this one right now, and it shows no sign of wanting to reverse yet. So should we take a predetermined profit of, say, I don't know, 3 times our risk? Well, our risk was that much. Our initial risk was modest. It was very, very modest. How many times that do you think it's gone already? Well, I haven't actually worked it out, but it's considerably more than the 3-to-1 level that so many people say, you must take your profits once the profit is 3 times what you could have lost. No, you let your profits run. And sometimes they run and run and run. And that's certainly the case with that particular trade. Now, various other bits and pieces over here which are looking sort of very interesting at the moment. The New Zealand dollar, for instance, the New Zealand dollar. We've got a pattern here. In fact, for those of you who are into classic charting, and by classic charting I mean, going back donkey's years before we would have stacks of indicators, this is a reverse head and shoulders, and price actually broke on up through. So we took along, yesterday, and last night, as you may be aware, the US Federal Reserve minutes came out, and that always causes a certain amount of whipsawing in the markets, and it was no exception here. And we actually had a good run up. But it's now come back below our safety level, and consequently, we took partial profits last night and stopped to break even, and I'm still looking at my account. No, I am actually still, no, it hasn't quite hit my stop level yet, my break-even level. So there we go. It's a trade we entered sort of some days ago. We got another signal to buy again last night, which we did. That trade is now closed, but the original trade is still running, and the stop is there at 72.96 effectively. So still running, may or may not do anything, who knows. Two other markets we're just going to look at before we close, and this one is the Australian. Now the Australian is a real interesting market in that Australia has the highest interest rates that are around in the Western world. Australia and New Zealand have the highest interest rates. Consequently, people like to earn a whacking return on their money. Well, certainly in relation to negative interest rates that we've effectively got in Switzerland. So money tends to flow into the Australian and the New Zealand. But what we found is that we get these topping candles shooting down, and it's doing it on very, very high volume. And look at the massive divergence that there is on the activity index. Price goes up, but the activity index has been a bit pedestrian. And then overnight we had some news coming out of Australia. It's managed to torpedo it. And also, if you go to things like, we occasionally look at the commitment of traders reports, well, the smart money is on the short side here. So there we go. Interesting market. And finally, we're just going to look at the euro. Now the euro has been doing very, very similar things. Look at this, shooting star, engulfing. They've been doing it on massive volume, and that's reflected by what is going on with the activity index. It's much the same. At the moment, it is going sideways, and over the weekend, I was reading a report telling me how bullish the euro against the US dollar is on all the fundamentals. But it refuses to go any higher. And consequently, I did my technical analysis, which suggested to me that it's possibly slightly more likely to go lower than it is higher. So I've now got this pattern. I've got these two lines. Whichever line breaks, we are going to get a humdinger of a move here. That's my assumption. Right, well, there you are, folks. I've just presented to you the way in which I look at the markets. I trade with some very, very simple indicators. And let me just go to, let's bear with me half a moment. I just wanted to mention this to you. Dipping it. You can go to tradersclass.net and traders.net, click this link. That takes me to what actually happened over here. you can actually sign up here for 97 quid for 3 months. I think we've... are we back with you? Can you hear me all right?
George, yeah, thanks.
I think we just had a little glitch there for a moment. So there we are. That's Traders Class. You get my videos for 3 months, twice a week. Shows you what I'm trading, why I'm trading it. 97 quid. Or indeed, you might want to get hold of the 20-minute extreme swing trade, and if you do that right now, I have just found that there is 300 the 20.
George, we're losing you, unfortunately. Just not hearing the audio.
Oh right, okay.
You're back.
All right, may well come back. Isn't it amazing? The technology, you know, it always glitches every now and again.
Just at the important point.
Yeah. So anyway, what I would say is that if you are in about things, head on clickevents.co.uk. Simon, if you'd be so good as to just pop that into the chat box, I'd appreciate it. Or indeed tradersclass.net, and just take a look at it. I mentioned there's a slight glitch in the pricing at the moment. This should be 375 and it is 275, so that is going to change in the next, well, it's going to change in the next 24 hours to 375. So if you're interested in grabbing this before that changes, it will give you my Traders Class videos twice a week for 3 months at no extra cost, usually 97 quid. It will also give you the 20-minute extreme swing trader plus its 2 main indicators, and that is usually at 275 quid plus another item which you can buy at 275 quid separately, which is the Harmonic Wave Trader, which gives you the Fibonacci package. But you, at this price, you actually get it all in for 275. So it's a mistake of pricing. So grab it while you can, but you won't get much more than about 24 hours to do so. So there we are, folks. A slight mistake there is something that you can turn to your advantage. So anyway, time is creeping on. I know I've just gone beyond time, and it's been an awfully long day, I guess, for you, Simon. You're probably only too pleased to get off and get a bit of dinner. But
George, indeed, and this is just a half day really, because we've only had 9 speakers. We normally have our 12, so feels like this is a round the clock trader light, if you like. But it's been fantastic, and it's been nice to have you finish our days, because normally you start our days. So I think a lot of people here will be able to hear you that sometimes miss you in the mornings, but. No, we've done a lot of good things. We've been making profits on day trading with Charlie Burton. We've looked at the stocks with David Paul. We've had Steve Ruffley in the morning giving us his sort of Fibonacci outlook, and now of course we've had a swing trader looking at your harmonic trader and the extreme swing trader. I know we've got a lot of people who've gone onto your program, and we do get good feedback from that, so that's fantastic. Keep that going. So George, thank you very much indeed for joining us. I think that draws us to the end. I'll keep in touch with you, and hopefully we can hear from you again next month for another update. But in the meantime, I think we'll just say thank you, George, and thank you to everybody here that's also been on the event today. It's been a pleasure to host the event for you all. I hope you've had good value from it. Lots of great information. You will get a copy of the recording. It takes about 2 to 3 hours, and then there will be an email will come from GoToWebinar with a button. It should have a button there, and it'll click to the recordings. I will also follow up all the various offers for the speakers we've had today and the links to their websites in an email in the morning for you. So if there's anything else in particular that you would like to get hold of, please don't hesitate just to email me back to any of the emails that you receive from London Investment Week or Round the Clock Trader. So thank you very much, everybody. Thank you, George, and we'll call the event to a close there. Thank you again. Bye-bye.
Many thanks indeed all. Really enjoyed being with you tonight. Bye for now.
Thanks, George.